and paying the price for duping investors over subprime loans. Citigroup has agreed to pay $7 billion to the U.S. government for misleading investors in the run-up to the 2008 global financial crisis. The case is a landmark win for the Department of Justice. CCTV's Shraysi Tandon reports.
$7 billion. That's the price Citigroup has agreed to pay for selling risky and faulty mortgage-backed securities in the lead-up to the worst financial crisis since the Great Depression. The $7 billion settlement includes a $4 billion civil penalty, $500 million which will go towards state attorneys and the Federal Deposit Insurance Corporation, and $2.5 billion which will go towards consumers, including those struggling to pay their residential Citigroup loans. U.S. Attorney General Eric Holder condemned Citigroup for its actions.
The bank's activities shattered lives and livelihoods throughout the country and also around the world. They contributed mightily to the financial crisis that devastated our economy in 2008.
Financial experts agree that banking conglomerates like Citigroup fueled the global financial crisis.
If you look at the actions of these lenders who were making what really was about $2 trillion of questionable loans that were not conforming, not government guaranteed, and another couple of trillion that ended up on the bank's balance sheets, doing their own lending that ultimately didn't conform to federal guidelines. All of these loans juiced home prices enormously. If they hadn't been lending us, we wouldn't have had a bubble.
Citigroup is the second mega bank to settle with the U.S. government over mortgage loans. Last year, J.P. Morgan agreed to pay $13 billion to settle similar charges. And currently talks are underway between Bank of America and the Department of Justice. Despite many big banks settling past misdemeanors, industry observers say there are still dangers that exist at these institutions.
These are banks that are incredibly complex, and they are still laden with enormous legacy assets from the period before the crisis. A lot of the loans, and this is something that I think people don't know, a lot of the loans that were made during the worst of the bubble years, 04, 05, and 06, are still on the books of the banks.
It's been a tough year for America's third largest bank. Earlier this year, Citigroup's capital plan failed the Federal Reserve stress test. The bank is also currently under investigation for fraud and money laundering in its Mexican unit. It seems Citigroup and CEO Michael Corbett are not short of any battles to fight. Shraysi Tandon, CCTV, New York.